This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The growing policy divide between the United States and the European Union on Russian oil exports to India is likely to play out in a small reduction in crude flows in October, analysts and trade sources with knowledge of loading plans said. The US, EU and G7 allies sanctioned Russian imports after Moscow's invasion of Ukraine, and prohibited insurers and maritime service providers from facilitating exports to third countries unless they were below a price cap. The purpose of the cap was to limit the price that importers could pay for Russian oil while keeping shipments flowing, thereby reducing Russian oil revenue and preventing a supply crunch that would push up oil prices.
Oil prices retreated slightly on Thursday on worries over softening US demand and broad oversupply risks, but losses were limited by concerns over attacks in the Middle East and Russia's war in Ukraine. Brent crude futures were down 11 cents, or 0.16%, at $67.38 a barrel by 0618 GMT, and US West Texas Intermediate crude futures lost 13 cents, or 0.2%, to $63.54. The benchmark contracts gained more than $1 each on Wednesday following Israel's attack on Hamas leadership in Qatar the day before, and as Poland scrambled its own and NATO air defenses to shoot down suspected Russian drones that had strayed into its airspace during an attack on western Ukraine.
Moving on to the top news in the energy sector.
Russia has revised up its September crude export plan from western ports to 2.1 million barrels per day, BPD, an 11% increase from the initial schedule, as drone attacks on domestic refineries reduce local demand for crude, two industry sources and Reuters calculations showed. Shipments from the ports of Primorsk, Ust-Luga, and Novorossiysk are now expected to rise from 1.9 million barrels of oil per day in the preliminary plan and also from 2.0 million barrels of oil per day exported in August. The increase in Ural's crude supply is expected to meet extra spot demand in India, where purchases of the grade declined in August, but remain strong despite Western sanctions. Indian Finance Minister Nirmala Sitharaman said last week that Indian companies would continue buying Russian oil.
U.S. crude and fuel inventories rose last week amid a decline in exports and demand, the Energy Information Administration said on Wednesday. Crude stockpiles rose by 3.9 million barrels to 424.6 million barrels in the week ended September 5, the EIA said, compared with analysts' expectations in a Reuters poll for a draw of 1 million barrels. Crude stocks at the Cushing, Oklahoma, delivery hub fell by 365,000 barrels in the week, the EIA said. U.S. crude exports fell by 1.1 million barrels per day to 2.8 million barrels of oil per day, while net crude imports rose by 668,000 barrels of oil per day. Next, we have the top news in metal markets. Copper prices on the LME slipped in Asian trade, weighed by potentially lackluster demand, though expectations of U.S. interest rate cuts capped losses. 3-month copper on the London Metal Exchange dipped 0.1% to $10,002.50 per metric ton, as of 07:05 GMT, while the most traded copper contract on the Shanghai Futures Exchange gained 0.56% to 80,130 yuan, $11,251.37, a ton. Despite the peak season for consumption approaching, the terminal margin has weakened, which may indicate a sluggish peak season, said broker Galaxy Futures.
Prices of iron ore futures were range-bound on Thursday, before a slew of data from top consumer China that's likely to set the direction for demand. The most traded January iron ore contract on China's Dalian Commodity Exchange was down 0.19% to 800 yuan and 50 fen, $112.41, a metric ton, as of 0341 GMT. The benchmark October iron ore on the Singapore exchange was 0.17% lower at $106.65 a ton, as of 0331 GMT. Next Monday, China is due to release a batch of key data including property, economic growth and output of industrial metals.
We will now look at the top news in the agricultural sector.
Chicago soybeans, wheat and corn firmed on Thursday as traders squared positions ahead of a closely watched U.S. supply and demand report. As of 0313 GMT, the most active soybean contract on the Chicago Board of Trade gained 0.12% to $10.26 minus 4/8 per bushel, snapping 2 sessions of losses. Wheat rose 0.24% to $5.16 minus 2/8 a bushel, while corn added 0.3% to $4.18 minus 2/8 a bushel. The U.S. Department of Agriculture will release its monthly world supply and demand report on Friday, with analysts expecting cuts to U.S. soybean and corn yield forecasts.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.